Thank you. Good afternoon. First, I'd like to start by a self-introduction. Lindsay, why don't you go first?
Okay. Hi, everyone. Pleased to be here. I'm Lindsay Fitzgerald. I'm one of the managing partners of Vesey Ventures. We are an early-stage fund headquartered in Connecticut, with presence in New York and Tel Aviv. We invest in companies that will transform the financial services industry.
I'm Peter. I'm with Connecticut Innovations. We are the state of Connecticut's strategic venture capital arm. We invest in early-stage companies, both on the technology side as well as the healthcare side. We have about 12 existing portfolio companies that are Israeli-based, and always looking to add to that portfolio.
Hi, everyone. I'm Lior. Over the last 6 years, I've been investing in the Israeli ecosystem as part of the team at Battery Ventures, which is a 40-year-old venture firm with offices in Israel, London, and the US.
As proof of Israel's advanced AI, I was the only one who got a microphone that doesn't work, and it knew that anything I had to say wasn't that important. But I'm Natti Ginor. I lead the Israel investment banking team at Jefferies. Jefferies is a global investment bank, about 5,500 investment bankers in 42 offices in 28 countries around the world. Our Israel practice is a huge effort and focus for the firm. We are 10 bankers, all of which, like myself, are dual citizens and Hebrew speakers. But the team is split between New York and Tel Aviv to be able to provide kind of global capital to Israeli innovation. We're the only bank that covers Israel in that way. And it's an honor to be here today with you all.
And my name is Shomrony. I'm a partner at Shibolet law firm. I work with startups, VCs, angels, multinationals, doing corporate, commercial, and M&A work. In addition to the global challenges that companies are facing in the last 2 years, Israeli startups are facing specific challenges, starting from the political controversy last year and October 7 events, which are followed by an armed conflict. And you are all investing in Israeli startups. I would like to speak not about the challenges, but rather the way you see those startups are coping with those challenges. Now, again, as investor in Israeli startups, can you share your view on the ability of those startups, and what do you see the way that they cope with these wins?
I'm happy to kick off. We're a small fund, right? Like, we're an $80 million early stage fund. And from an outsider, it may seem crazy for us to have a presence in Israel for being such a small fund, like 5 people, $80 million. From our perspective, Israel is a key geography to be investing in the world that I care about, which is financial services and enterprise software that serves financial services, which of course includes cyber as well. I will say, I'm an outsider. I've started investing in Israel in really just the last 5 years, and I'm American. But when I met my partner investing in Israel, she really opened my eyes to the opportunity in investing in Israel, which is unfortunately not price arbitrage, but extreme talent arbitrage. There's a million stats we can throw that you guys are all very familiar with of the education and training of Israeli founders. But the thing that has really surprised me over the last 5 years in working with Israeli entrepreneurs is the resilience, right? As Israelis, you have just a different risk tolerance from day one, right? Like, it's not like someone that grew up in San Francisco or New York. And so there's this sort of like built-in attitude of course we can make it through this. And that's been no more evident than in the last 6 months, right? When we didn't know, sitting here in New York, what was going to happen to the startups in our portfolio that were in Israel. We feared the worst, we hope for the best. And every single one of them, within a few days, they got it together. They sort of said, yep, 15, 20% of the workforce is getting called up to the reserves. We're just working harder. It was like no big deal. It was really an amazing experience working with our Israeli founders through that experience. And I don't think anyone even missed a beat. So just sort of like the team spirit and resilience has been, one of the reasons we're doubling down in Israel.
Yeah, I think our experience has been very similar. We made a conscious decision back in 2016 that was a market we wanted to work on and invest in. And since then, we've deployed capital into that space. And I knew the first time I landed and spent a week there that this is a great market for us, and the opportunity is there. There's great technology, great people, and the passion is second to none. So that's why we continue to be actively investing. Some of our companies had to pivot as a result of October 7th and adapt to the new environment. And those companies right now are prospering, and we're pretty happy, from the perspective of how they're still growing.
Yeah, the one thing I would add, I have almost a dozen portfolio companies in Israel, and a little bit of an inside view is it's kind of obvious to give a lot of credit to the entrepreneurs who have done amazing job, but I just want to give another shout out to the teams that are working across these startups. It was kind of amazing to see they're not the founders, they don't own 30% of the company, but people have done amazing jobs within stretching out as their team members were going into reserves. Everyone here knows a big portion of every Israeli company, the revenue is derived from around the globe, right? So people had to work 24/7, they had to work weekends to stretch out and kind of compensate for the missing team members. So I think it was a very broad ecosystem effort that helped us kind of overcome this in a short period of time. And it was, as a venture capitalist, was super surprising for me to see that 2 or 3 months after the horrific events, we were seeing exits happening in the country and startups that are getting sold, raising money. And as part of the Battery Ventures team, obviously in the first kind of few weeks, we haven't focused on making new investments just because our portfolio companies needed help and we focused on this side. But 2 months later, we've started to see more founders coming in, starting to raise again. Some of them were, just starting out their seed round, and October 7 happened, and they just, got it up and running and came to raise again. So I think from the investor side, it was a lot of big effort to help those founders as well, both the portfolio and the new ones that are raising. And it was surprising to see how they got it together so quickly.
Yeah, I'll just add one thing. We have a really interesting business at Jefferies called GP Solutions, where we help venture capital funds monetize a portion of their portfolio. Oftentimes it's secondary. So we, at the end, in the middle of 22, did a multi-asset strip sale where we sold 30% of one of the VC's portfolios, and that helped them crystallize carry and take capital home and get DPI, and it was a great way for them to create some monetizations. After we did that, we had the opportunity in June, July, and August to look at, under NDA, the portfolios of 9 of the top venture capital firms in Israel. And we did a lot of work on all these to figure out which, if any, we wanted to take on as our next project. We were, at that point, concerned about judicial reform, which, of course, at that moment in time felt like the biggest thing in the world, and amazing how perspective changes. But what's amazing is that when we looked in December, or in January, at how the fourth quarter numbers relative to expectations were, for most of the companies in those 9 venture capital portfolios, 90% of them met their budgets. And that's with 10 to 15% of their people out in November and December. So forget resilience and opinions, we all feel that. The numbers, right? And Israelis don't always kind of achieve what they're going to say they're going to achieve because they shoot for the stars. But in 90% of the cases, they met their numbers, and in 20% of the cases, they exceeded them significantly. That's dramatically interesting. By the way, just one funny thing, a lot of the companies said, all of our people are out in reserves, and I said, where are they serving? And they're like, well, the hardware engineers are in Golani and Givati, but the software engineers are in Modi'in, which was just a funny line.
From where I stand, I also see that those challenges create a lot of opportunities. Do you see specific areas or specific fields that you think that the challenges created opportunities, emphasized opportunities, things that you think are going to be big?
I think just quickly with my perspective as a fintech investor, companies that serve financial services, there's volatility in Israel, there's volatility across the globe right now. Any company dealing in security, risk, fraud, and the data that enables those things, those are amazing investments, right? Those will constantly be top of mind. AI is obviously very interesting, but as I look at financial services as an opportunity, The fraudsters adopt AI much more quickly than the banks do, right? And so that tells me the opportunity is actually in those security solutions and in the risk solutions. Obviously, Israel's probably the top country in security solutions. So I actually think the more volatile the times, the more Israeli entrepreneurs and the training they have gives them an advantage.
Yeah, I would agree with everything that Lindsay said. I think one of the areas we focus in on at Connecticut Innovations is, we like dual use technologies. We actually, my colleague Matt is in the back of the house there. So we're actively looking for opportunities, in the dual use space, both for military and civilian purposes. So that's one area we think we're pretty excited on as well.
One interesting thing that I'm seeing is both from new founders' perspective and employees that kind of working in like big corporates. So on the latter, I've seen like people working in Meta or Amazon or wherever it is, and kind of following October 7, they kind of got tired from doing the same thing, and starting to think about how we can better help the ecosystem from our perspective, and starting to think about maybe I should start working in Raphael or Elbit and start working like more kind of meaningful stuff. So this is an interesting trend that's happening and also impacting kind of the founders that are living wherever they are and starting to think what they want to do. And I'm seeing more people thinking about defense tech, quote unquote. Doesn't have to be like weapons specifically, but things that are more broad within defense tech, whether it's communications or drones or anything like that. And also investors, I think, are becoming more open to this. Specifically in Israel, I think it's a little bit of a newer thing to sell to government agencies, or kind of being B2G wasn't a huge focus. And I think it's starting to change. I hope this trend would continue. So that's what I'm seeing kind of from the inside of new founders.
Yeah, nothing to add. I agree with all that.
Okay, and do you see any impact on your decision making when investing in Israel, and things have changed in the way you think, and maybe you can address that? And there's also a difference between you, because some of you go to later stages while you focus, I think, more on early stage.
Not a lot has actually changed in our decision-making criteria. There are like little, I would call them like logistical things that we pay more attention to, which is where do you hold your bank accounts, and do you have the ability to flip to a U.S. company if needed, and how are you thinking about building team and that sort of thing. But honestly, those are like details, none of them deal breakers, and aside from that, like really status quo.
I mean, one of the things we're looking at is runway and strength of syndicate as well. So to making sure the companies are raising enough capital to make it out 18, 24 months and get beyond.
Yeah, that's clear. Looking forward, looking at M&A activity, IPO activity, and I think, Natti, you would be able to address that from a broad perspective. What do you see?
So we've had 3 IPO bake-offs in the last 2 weeks. That's 2 more IPO bake-offs than we had last year. So that's encouraging. We won 2 of the 3, so that's encouraging for us too, but I'm sure that's not what you're focused on. We are currently mandated on 4 M&A sell sides. And there is a huge interest now, not just from financial sponsors who, especially on the growth equity side and the private equity side, are kind of underdeployed for the last, call it, year and a half. But a lot of the strategics, and obviously we've all seen it, to your point, Lindsay, in cyber, right? I mean, between Palo and Zscaler and everybody else that's been acquiring cyber businesses in Israel. But we're seeing a lot of strategics in the U.S. who, across the board, not just in cyber, who see their own growth somewhat challenged, but are sitting on huge pools of capital, and also see valuations that, while they've recovered off the trough, still are, never going to get to where they were in 2021. And so they see an opportunity to buy growth at reasonable valuations. And so we think it's going to be an incredibly attractive M&A environment now that inflation is somewhat stabilized and interest rates are kind of, call it 400 basis points. You can start to price assets and you can start to deploy capital. So we're definitely seeing that improve. It's a little early to say that the IPO market's open, but we did launch a lead left IPO yesterday. We'll see how it goes, but it definitely feels a whole lot better than it has for the last year and a half.
On M&A, I would just say I think it's a better generally, like it's impacted from the global macro ecosystem also in Israel. And I think it's generally a healthier environment for M&As because if you go back maybe 2 years where in a crazy hype cycle, every company would raise with whatever metrics they have. It obviously makes it really hard if you're a strategic and you want to buy. The pricing expectation is so different. The bid-ask spread is hard. So at least now, I think entrepreneurs and companies in general thinking more healthy terms, more into efficiency, and that really helps also the strategic buyers to kind of bridge the gap between the bid-ask spread.
As for M&A, we all see, by the way, the cyber M&As in the last quarter or so, which are amazing. We had a few amazing ones, and we now see, I see it, I mean, we all read newspapers, a lot of AI. We've seen NVIDIA twice in the last month or so. So, and I think it in a way relates to what you said about the areas of focus that we will see. Do you see strategic investments in portfolio companies that you're accompanying?
Strategic investments are actually a huge part of our strategy. So we see I actually, before starting Vesey Ventures, I worked at American Express Ventures for about 10 years, right? So I saw the value of what a strategic can bring to an early stage business in terms of commercialization. About half the LPs, the investors in our fund today, are, again, strategics, folks from different parts of the financial services industry. And so that's a value that we actually provide back to our portfolio to say we're not just providing you capital, we are providing you access to the heavy hitters and needle movers in the financial services industry. They support us on diligence, and of course, they support our portfolio companies. These companies all have an interest in driving their own innovation agenda. It is really hard for highly regulated, big, old institutions in the United States to develop any of this stuff themselves. So it's actually an amazing partnership, and it's valuable for American founders. It is incredibly valuable for Israeli founders, right, who bring a lot of amazing talent to the table, but may not be networked in the sort of like New York financial system, right? It's part of the value that we see in being in both in Israel and New York as a fund. But we haven't seen strategic investors shy away at all from investing in Israel. You often see that corporate investors sort of like take a nod to like what gets announced from the institutional venture capital community, and I think the institutional venture capital community blinked for like a second on investing in Israel and then got back to it. And we've seen corporate follow suit, like really lots of great interest in investing in Israeli businesses.
Yeah, I would add that one of our companies just received a pretty significant term sheet from a strategic, happened to be in Israel, so hopefully, we can get that to close soon.
You need a banker.
We may need it.
Yeah, I can add that I thought that the events that are going will, in a way, make some change, but I personally was involved in the last quarter with 3 strategic investments from US big corporation and Israeli companies. Like you said, they blinked for a second and moved on. And 2 out of the 3 are already bringing results in terms of, they have a huge client base, so they just bring those startups to their client base and the results are amazing. We have like a minute left. Do you have any advice to the founders here that are looking to raise funds and would like to hear advice from VCs that are their target?
Yeah, I can go first. I would just very quickly say don't take the 2-3 years in the crazy hype cycle as an example or a benchmark for anything. We kind of went back to the environment of 2018, 2019, not necessarily on pricing, but kind of in terms of process. And VC investments just takes time. It doesn't happen over the weekend, as some examples happened in the past. So don't stop. Continue. Talk to as many investors as you think are relevant for your round, and just push through. It takes a little bit longer. The terms are a little bit less favored than they have been in 21, but we're still interested in continuing to invest, supporting innovation, and so on.
Can I add one thing to that? I agree with that, but I just want to give another perspective as well, even though I'm the only one who's not an investor here, so I probably shouldn't be talking. The value
of having the right partner and the right investor alongside you is much more important than the dollar amount of that valuation. Now, it sounds like that's easy for me to say, but with each round, it should be the lowest you ever raise capital, right? You should never raise capital necessarily below that. And that means don't take money at particularly high valuation. Think about the right partner. If you're really concerned about taking too much capital at a lower valuation, just do a lower round, do a smaller round. But get the right partner in who's going to be a great, long-term partner and help you achieve your real objectives. That is the best way to make sure you achieve what you want to achieve long-term.
Thank you.